Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today going over first red day, powerful signal, and identifying parabolic opportunities when those trade setups present in the session that you're trading. Page 58 in the playbook. The charts that we go over today that will be put into the course first green day, first red day section in PDF form for extra support material along with the others. So they'll be in the course inside in the first red day and first green day sections for your own use. Now we're looking at the Euro 1 hour chart. Thursday put the low of the week in a market that broke out from Wednesday's low of the day and putting lower lows. The low of the week was the low of the month. Friday broke the high of Thursday, so we have a break of a daily level on Friday. The new week starts on Monday, and we have day 2 of breakout traders in the markets. Tuesday breaks the low of day of Monday, a break in structure on the downside, a lower low. And to some degree, we could call this a first red day, although our peak formation is down. But we have day 3 breakout traders on Wednesday before the market breaks down and definitely closes as a first red day, making lower lows again on the inside. So traders who were savvy to the 3 days of breakout traders saw the breakout in the Asian window before coming back inside and allowing traders in the Europe window a parabolic collapse. And then the low-hanging fruit trade in the US session, breaking through the low of Tuesday. So we had day 3 longs in the markets, page 51 in the playbook. The US session continuation trade, the low-hanging fruit, page 96 in the playbook. That closed as a first red day. So again, we had day 1 breaking the high of Thursday. Day 2 in the new week breaking out of Friday's high of day level in a market that was in breakout short, making lower lows. So if we project Wednesday's, the bearish breakout day across, we see that we're pumping back up into the higher time frame sellers. That market collapses on 3 days of breakout traders, the false break reversal at the high of the new week and closing as a first red day. That now can set up for a potential first red day opportunity. How does price behave on the day in the session that we're trading? We come to our US session. We have a market that is now broken out of the Asian range in the Europe window before breaking down and making lower lows on the inside. There are 2 types of templates that can present on a well-engineered chart, either a pump and a dump template or a dump and a pump. Now we have a first red day signal. We had major red news at 8:30. Market is pumping up into closing price level, and we have our 3rd hour reversal and our basic model for trade entry criteria, page 29 in the playbook, coiling sideways and the parabolic collapse, taking out the low of the month. First red day signal after 3 days of breakout traders. And if we go back and look at our hourly chart, a higher time frame pump and dump template. 3 days of breakout traders, the false break reversal collapse, giving us the first red day signal, lower lows on the inside, pumping up, coiling sideways into our 3rd hour and the parabolic collapse. 3 playbook best trade opportunities for traders. We had the Asian session, 3 days of breakout traders reversal, the Europe London window collapse and the low hanging fruit trade, and the first red day parabolic blow off through the low of the month. An excellent opportunity to traders in the community today. Understanding that higher time frame sellers were still driving this markets. The lower lows, the pump, and the dump back down through the low of the month. The escalator up and the elevator down. Front side of the template and the back side of the template. The next currency pair we'll look at is the Euro Canadian. Thursday put in our peak formation, low of the week and low of the month level. Friday broke out of Thursday's high of day level, having day 1 breakout traders now triggered into the long side of the market. Monday also triggered breakout traders into the market, so now we had 2 days of breakout traders into the market long. But on Tuesday, the market broke down and it closed in breakout on the short side, closing as a first red day, page 58 in the playbook. We have breakout traders in the market, and this market continued to break down, closing in breakout again in the US window on Wednesday. So I want traders to understand the concept of higher time frames. We have an hourly chart, but when we have an hourly chart closing in breakout 2 days in a row, we now have 4-hour, daily, and higher time frame traders driving this move. And as I've explained, we can have a day where the market may not have a complete collapse after a first green day or first red day, and the follow-through day is where we see the ACB opportunity, the full collapse and the breakdown through the low of month level. A market that coils sideways without breaking out is preparing for a potentially explosive move, and we saw that on Thursday. So when we come to our screen in the US session, the market is already in breakout, and we've talked about using 100% expansion of the high of day, low of day level as a potential profit target area. The market is already in breakout. This is not a false break. This is not a low of the week reversal setup. It's Thursday, day 2 on the backside. We can have range expansion opportunities and range reversals. We're in a first red day pump and dump template in a market that has closed in breakout and is being driven by higher time frame traders. This is an ACB template because they are, as we can see now, not coming back. So when we come into our US window, the market is already in breakout. So immediately the thesis is a range expansion opportunity in the US window after major red news is released. Basic model for trade entry criteria, page 29 in the playbook. Peak formation after major red news, and the coil into the New York Open for the opportunity to be adding or scaling into this position as it's coiling and about to explode. We have a 100% expansion of the range for taking off the bulk of the profits or managing our trade once it passes through that level to lock in the maximum amount from the winning trade as possible. Now, if we just go back to the template, I want to emphasize to traders that trading these other little session swings are your choice or your individual decision in the session that you're trading. But the larger template, as it unfolds, allows traders to look for the scalable opportunity where the market's coiling on smaller time frames and about to explode for a range expansion opportunity. The first red day trade on the Euro Canadian. Next, we're looking at the Dow Jones 30. The market closed in breakout on Friday. We saw a peak formation blow off and reversal closing back inside of the opening range on Tuesday, day 2. Wednesday drove down into the peak formation and pulled back and stayed in range and closed as an inside day. The inside day, page 69 in the playbook, false break reversals or trend trade reversal opportunities. Now, this is a key thing because we come to Thursday, and after major red news, before the session begins, the market has already broken outside of the inside day. Now, this is important to understand because an inside day, if it's a false break reversal, will typically break out earlier in the session. We have peak formations down below closing price, peak formations down on the inside day below closing price. And on Tuesday, day 2, the larger peak formation down before closing back inside of the range. Peak formation low, higher lows, 3 pushes down on Thursday, and a breakout of the inside day. We have breakout traders now triggered into the market heading into our US session. We now have a market that is potentially being driven by higher time frame buyers, higher highs dumping down into the breakout of the inside day. Remember, we have breakout traders already triggered in the market and now potentially a third hour range expansion in progress. We have 100% expansion of the range, but we can also look to our left to identify where sellers have come into the market. And we can project levels across looking at where that breakout occurred from the previous Thursday for where this trade could potentially fail or leaving this market into the close. A fantastic first green day dump and pump reversal. Peak formations are down. The coil into the third hour for the explosive parabolic range expansion on the Dow Jones 30. And this brings me to my quote that if Bill Lipschutz, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. There are nail and bail session opportunities, and there are 3-day templates that build for explosive parabolic moves. Keeping things simple, sitting on your hands, and allowing the larger, higher time frame opportunities to build and present. These were fantastic playbook opportunities for traders this week. Keep it simple, traders, and may the markets go with you.